Today we're going to jump right into the numbers so that you know exactly what's happening in the Kelowna market right now. We'll start with an overall view of kind of what the market's doing. We'll look at inventory. Then we'll start with single family homes, move into townhomes, and if you're looking at the condo market, we'll get to that last. So starting with residential sales, they are down 3.6% year over year. However, last October was a bit of a jump from what it had in September, and overall 2025 seems to be performing better, or at least we have more sales than we had for the last 2 years. In the individual markets, sales were down, as we said, overall in the market, but they were down 2.3% in the single family detached home segment. There were 171 sales in October. Townhomes were down 5.2%, and the condo market continues to decline. Sales were down about 10%, with only 84 condos sold in Kelowna last month. Residential inventory is up 0.6% year over year, and you can see that we're starting to experience that seasonal downturn where there are less homes and properties on the market through the winter months. But if we do look out over the last 10 years, our inventory is up significantly from the 10-year rolling average. There is a lot of choices for buyers out there, and this means still, like it has for most of this year, that buyers really need to be tight with their pricing. You have to be on point with your pricing, or a buyer's just going to move on to another property. And in this market, if you're just testing the market, you're actually helping your competition sell faster, because if there's two properties on the market and you're the highest one, that makes your competition look better, and that home's going to sell probably quicker than yours will. Starting with the composite benchmark price, this is the benchmark price of the market overall with all assets kind of rolled together. In October, that price continued to come down. It's at 782,000, which is down 13% from the market peak that we saw in the spring of 2022. It is relatively flat from where it was in January. And if we're looking at the market as a whole and asking ourselves, is this a market crash? I don't think it is. It looks like we've had a market correction, but it's been relatively flat, the market as a whole, over the last 9 to 10 months. Still, there is a bit of a decline there since the spring. And if we look at what has happened over the past year, as I was saying, the market kind of peaked for 2025 in June, and it has been slowly coming down over the last 4 to 5 months. And it did decline, but only slightly in September. This could signal that the market's starting to flatten out as we go into the quieter winter months. Moving on to the benchmark price of a single-family detached home, it was up 2.2% month over month and came in at $1,042,000 in October. This is up about $20,000 from where it was last month. This is up about $20,000 from where it was in September. And if we go back year over year, it's actually up 6.1% from where it was this time last year. And if we look at the graph, it tells us a bit more of the story. That price is down almost 12% from the market peak of 3 years ago, but it is up slightly from where it was in January, where we started the year. There's been a lot of movement in this segment of the market. There was some softening throughout the summer months, but it has gone up again from September to October, and I'm wondering if this signals that we've reached the bottom of that market correction in the single-family detached home market. It is up from where we were this time last year, over $60,000. And going out over the last decade, the price is up about double from where it was in October 2015. And looking at the right-hand side of the graph here, you can see that the price has kind of gone up in general over the last 12 months. I really don't think that there's a crash coming to single-family detached homes in Kelowna or the Okanagan, and we might even be seeing a trend where those prices are going to continue to appreciate. Moving on to the townhome market though, this segment of the market was down 5% month over month and came in just under $700,000 in October. That price is also down 3% year over year. And if we look at the graph of the benchmark price, it's down 17% from where it was in the market peak, but it's down significantly month over month. When there's a drop of like $40,000 from one month to the next, it really makes me wonder if this is just an anomaly, if there was something in the calculation, but it's something that we should keep an eye on. And the reason why this big jump makes me question if there was an error in the information or if it was just a one-off is if you look back at July 2024, there was a huge spike that month in the benchmark price, but then it came back down more in line with where it was the month before that. So this is definitely a segment of the market we have to keep an eye on. And if we look out over the last decade, that price is up almost $300,000 from where it was 10 years ago. Moving on to the condo market, prices continue to slide in this segment of the market, coming down 1% month over month, but not as significant of a drop as we've been seeing in previous months. This could be signaling that the market's reached the bottom in this segment, or at least prices don't have as much pressure to come down. Year over year, though, that price is up 1%. So I think we do have to look at the graph over the last 12 months to give us a better explanation of what's happening here. If we look at that graph over the last 3 years, yes, condo prices are down 12% from the market peak. And over the last 5-6 months, that price has steadily been coming down. So even though it's still up slightly from where it was this time last year, there is a trend in condo prices coming down. And with over 800 condos listed on the market right now, just on the MLS, and keep in mind that doesn't include anything that developers are sitting on, there's going to be continued downward pressure on condo prices. If you have something listed right now in this segment of the market and you're priced a little bit high, you're essentially chasing a falling knife. We don't know where the bottom's going to hit. And the best way to make sure you have a better chance of selling is to get out ahead of the market and price your home appropriately. Going back over 10 years, yes, condo prices are up more than double from where they were 10 years ago, but as we mentioned before, there's a general trend that prices in this segment of the market are going to continue to come down. Moving on to the price ratio, this is the ratio that a buyer can expect to pay against the most recent list price of a product. In the single-family detached home market, homes are selling for about 97% of the most recent list price, townhomes are 97%, and condos are just under 97%. So you can gather that on average, a buyer can expect to get a discount of about 3% off the last list price on average if they do buy a property. Moving on to months of inventory, this tells us if we're in a buyer's, a seller's market, or a balanced market. In the single-family detached home segment, we have just under 8 months of available inventory. This means that any 30-day period, 1 out of every 8 homes listed on the market is selling. This is an improvement from the buyer's market of 9.2 months of available inventory that we had the previous month, and this move closer to a balanced market, which is generally 4 to 6 months of available inventory, could be one of the signals why the price in the single-family detached home market has stabilized and even gone up a little bit month over month. In townhomes, we have about 8 months of available inventory, which is the same basically that we had the previous month. And in the condo market, we are above 9 months of available inventory again, which is an increase from the previous month. And this is one of the major factors putting downward pressure on prices in the condo segment. And I do believe that this downward pressure is going to continue as long as we see this available months of inventory remain high. And keep in mind, as I mentioned earlier, this does not include any inventory that is available from developers in new build construction. So just to recap, in the single-family detached home market, we have 7.7 months of available inventory, which is a buyer's market. Townhomes are also a buyer's market at 7.8 months, and the condo market is still a buyer's market at 9.4 months of available inventory. So what does this all mean? In general, it doesn't look like we're heading for a market crash in the Okanagan. Condo prices are correcting and crashing still. I still don't want to call it a crash because it's not a drastic change month by month, but it is certainly a correction. But the correction that we saw in townhomes and single-family homes seems to be leveling out, and we may be signaling, especially in the single-family home market, that prices have kind of reached a bottom and will balance out around there over the next few months. If you're a buyer in this market and you're waiting for prices to stabilize, if you're looking in single-family homes or townhomes, it might be a good time to buy because home prices do look like they're stabilizing. But if you're in the condo market and you can wait a little bit longer, I would probably think waiting is a good idea as prices continue to come down. However, if you do see a property that you really like it probably is a good time to put in an offer. And if you're wondering how this affects you, you can reach out to me at one of the 2 links down in the description, or you can text me at this number. Thanks for watching. We'll see you next time.